see here. So I have Ocugen on the screen. Those of you that have stayed and are watching right now and know this, I have Ocugen on the screen. But you guys can tell me different ticker symbols you would like for me to go ahead and talk about so that I could take a look at it for you guys and we can see some of the supports, resistance, any stocks that you want me to take a look at that you haven't, had a chance to see any supports or resistance. I usually try to do as many ticker symbols as I can, right? That's something that I'm still working on as much as I can throughout the day. I mean, I do usually 5 to 10 different ticker symbols, but, I wanted to try this out and see if there's any ticker symbols you guys want me to take a look at. But right now, let's go ahead and just talk about some of the stocks that I believe have opportunity, right, for April. So this big run here that this particular stock had, Ocugen, was pretty nice, and you can see already the anticipation going into April. Now, another one that I'm looking at, and it's pretty interesting, and a lot of people are like, well, nobody knows the bottom on this one. Nobody knows what this one's truly worth, right? And that's PLTR. PLTR has actually hit the bottom here of $20 twice. We've been talking about this one over at the Patreon several times. And I've talked about, trying to catch this one, if it was to happen, to catch it below $20, right? Like anywhere between $15 to $20 might be a steal here with PLTR. I don't know what you guys think about this one, but you guys are more than welcome to go ahead and state that. But if you have anything that's like different or you agree with me, I would love to see your guys' thoughts. But one thing I do want you guys to be aware of is here in PLTR stock, it's had a big run today and it's set for a nice pullback, but this pullback might just be temporary. And if it isn't, then we might see it drop back down closer to $21 to $20 because that's what it really does. But this could be a slight setup, right? These setbacks or setups to go ahead and take off again. Now, another stock that I'm watching for April, right? Because I posted a video earlier about the top 3 stocks that I'm watching, and then actually 4 because there's a bonus. This one is a merger company. I'm not sure if you guys are familiar with it, but they're going to merge with Nerdy, and it's called Pace, P-A-C-E. You definitely want to go ahead and do some research on them. They've been pretty quiet, right? Like they're not really with a lot of movement, anything crazy going on with them. And, they're basically back down to SPAC pricing, right? $9. That's usually where the SPACs start, $9, $10. Anything below $10 is like a steal as long as it's not something like Clove, right? Clover Health is going through a lot of different things right now that's pulling it down significantly. But if the stock has nothing negative about it and we're just waiting for the merger, this is usually a big opportunity, anything in the $9, $10 range, because of the fact that this can go ahead and take off once the merger date is announced, right? They said it's for Q2. We're not too sure when it's going to happen, but it's going to be a big deal. Big deal moving forward. We'll have to see what's going on there. But this is definitely one to watch, okay? For April, we're going into Q2. April is said to be one of the best months also in the stock market. We're going to have to see. Some people are saying this might be the first time in a while for April not to be as great as a performing month because of all the volatility and all the things going on overall in the market. Another one that's a big opportunity here is NIO, right? We've been talking about this one back here over at the Patreon as well. $37 and some change. We caught it when it dipped, ran back up to 39, fell back down to 34, created some support there, and it's been running since. Now, I'm not sure if this is going to pull back significantly. We're going to have to see. Tomorrow will be a big indicator to let us know how investors are truly feeling about this, okay? We're going to have to see how they truly feel and what they think about this, because right now investor sentiment is pretty bullish, and there's been a lot of things holding NIO down, right? The chip shortages, the factory closing for 5 days, and then also the U.S. and Chinese tensions with the stocks, possible delistings. Those are all temporary setbacks right now. The only one that can become a reality or a big hiccup is the NIO issue with U.S. and Chinese relations, right, and delisting. But we'll have to see, because that was an issue that we had last year. It doesn't seem like we're going to have it again or anytime soon. Let me go ahead and see here. So, yeah, holding NIO for a while, right, Jacob? Yeah, that's one that we definitely want to hold for a long time. This is something that would possibly be a long term, okay? They call this the Tesla of China, but that doesn't always mean that it's going to be exactly like Tesla. I don't want anybody to ever have their hopes up that this is going to be $1,000, $3,000 stock. But when you zoom out here, put the 1 day here so we could see a little bit more. When you zoom out here, this was a penny stock, okay? Back at $1, $3. I mean, this is easily 10x, right, from the $3 mark, and 30x from the $1, right? And if you want to say $1.50, okay, let's just say 20x. It's been going up a lot. It's created some support here in the 30s. Worst case scenario goes back down to 25 on a very, very red, turbulent market, which could possibly happen. I've done a video about that as well, on the good, the bad, and the ugly in the overall markets. But right now it's holding itself up pretty well. And like you said, yeah, this is one that you want to hold long term, Jacob. That's a really good statement. These prices, though, you always want to think about the market, and I say this all the time. Whoever bought here, right, was buying without knowing that it was going to go here. They had some type of anticipation, right, some excitement that it was going to end up here. Now, they didn't know exactly where to, but it was going to reach somewhere, right? And whoever was buying there, the mentality is, when you buy at that moment, today's prices are going to be better than tomorrow's prices. You always have to think that, right? Especially when you have a high conviction in a stock. Now, this stock right here, sitting at $38, $34, you have to think that today's prices are going to be better than tomorrow's prices, ending up somewhere up here or way beyond that. That's something I always talk about. Today's prices. Remember, this was yesterday, right? Because that already passed, but that was once today, okay? That was once upon a time in July, the present. And in the market, that was a day that was today, and investors said, I'm buying today because today's prices are going to be better than tomorrow's, right? And that's how you got to think about this. That's why my channel is called Invest for Tomorrow. We focus on the destination. The destination's always up, and we enjoy the ride of the journey. And that's right. Invest for tomorrow, no pun intended. You always want to invest for the future. Let me go ahead and see here. So we have here Hype Plug. What should I invest in? I can't make up my mind. Which are the best in gold, silver stocks? Message retracted. Regal took off his message. Okay. So Hype Plug. What should I invest in? I can't make up my mind. Well, it depends. I mean, it depends what you're looking for. Are you looking for, high growth? Are you looking for stability? I mean, there's a lot of different stocks out there. I'm not a financial advisor. I'm not here to tell you to buy, sell, or hold any positions, but there's a lot of different sectors and options, right? Let me go ahead and see. Disc B. Regal said Disc B. Let's see what Disc B is. All right. Oh, wow. Let's see here. Oh, Discovery. Okay, Discovery Inc. Okay, this thing ran, okay? This was wild. This is probably a short squeeze here, most likely. That's my thought on it. Now, long term, this does have potential because remember, they just came out with the subscription service. I don't know if you've seen the commercials. They're like everywhere. But man, I don't think this is worth right now where it's at. It could get back to these numbers or probably back to this high of 150. I could be completely wrong, but that's a really big jump in my opinion. In my opinion, it's too fast, too good to be true here. When you look at this jump in just a few months, right, and then boom, we're sitting here in the hundreds now, and it's happened way too fast here, way too fast. And that's Discovery B. Let's look at Discovery A. Let's see here. So Discovery A here has dropped, right? It's doing the opposite. I honestly think that there's a lot more potential for this company when it comes to Discovery A than Discovery B. I'm not too, I don't like it too much. I'm gonna be honest with you. That's something that is a little bit too volatile, too risky. If you really want to invest in the stock, I would go with A, Class A stocks from what I'm seeing here. Let's see here. You guys are all commenting. Let me see your guys' comments here. All right. I've held NIO since December 2020. Definitely bullish here. How do you see CSCW? I was in on Zomedica at 17. LOL. Who's in the BDRFB? All right. Let's go ahead and see here. Yeah, man. Jacob, I'm so with you. The fact that you've been in NIO for a while, you're all for it, man. Oh man, yeah, TR Kobe, man, love you too, brother. Appreciate your support always. If you got any stocks that you want me to take a look at, man, you're all for it, man. The stage is here. It's open for you guys to go ahead and ask questions or any stocks you want me to take a look at, like resistance, support levels and stuff. And I was talking about the stocks that I believe have potential in April right now, a little bit earlier. But CA, man, Zomedica at 17 cents. Look at you, man. That's awesome. Yeah, no, Zomedica is definitely one that has potential. I mean, we're seeing it kind of sit right now at its kind of support levels that a lot of analysis ratings have made. And it's kind of sitting between that 150 to 170. I've always said it in all my videos. As long as we see this one stay above 130 here around this area, it's definitely something to keep in mind. And 140, and we're sitting like around 150 to 170. And analysis ratings are saying this can go up to $3, right? And the most $3.50. The low end $2.50. So we're going to have to see how that plays out. Maybe Trueforma can surprise us and it could do better. So you're big on IRDM. Let's go ahead and look at that. IRDM. Let's go ahead and look at that. Whoa. Communications Inc. Wireless. Is this a 5G play or something like that? Is that what you're trying to do here with this one? I don't know much about this company, but give me some insight. I'm going to look at the chart if that's what you want me to do, or I could talk to you about, but I would like to know a little bit more about it. Seems interesting. Big pullback here from the 50s, sitting at the 30s. Let me go to 1 day here so we can go ahead and see. Yeah, sitting at $5 over time. Dropped in the 2020 to $16, and this is almost 2 to 3x already. Okay, some momentum there. So let me go ahead and look at that chart here. I picked Iridium out of AZRX portfolio because it looked like the biggest swing potential. Oh, okay. AZRX. Awesome. Yeah, I actually was looking at AZRX. I made a video of some of the stocks that would probably be there, and I think I kind of nailed it on two of them with Kratos Defense and Virgin Galactic. I haven't looked at the ETF since the day I saw that it was actually there, but I gotta look at it again. I actually saw it, I think it was yesterday, and then that's it. But here we are. IRDM. What a run, right? Like leading into possibly being in that list, and it is, and you're taking it as a possible swing trade here, a potential play, momentum play. Well, I have a few support levels here for you. The first thing is the 50-day moving average, $39. Okay, you want to keep that in mind. Pay close attention to that to know on what side of the chart you're in. Now, the first support is right here at 40.21, and your next one is literally close to the 50-day moving average at 39.10 cents, 09, around that area. Now, your resistance level that you really want to watch is 41.60. Okay, that needs to be broken through by the bulls to reach newer highs and new resistance levels and continue this momentum. It's so important for that momentum to continue. And then once that's broken through, the next point would be up here at 42, and then you would look up at 42 and some change, and then way up here at 48 if a true momentum continues. So it's been pretty strong with momentum since $35. It's up $6. I'm not sure when you got in, but you definitely want to watch those movements of that area. Let's go ahead and see here. Space related, honestly, I don't know the fundamentals, but I'm going by ARC's addition to the portfolio. It's one of those first to do homework later things. I like the chart action for now. Seoul. All right, let's go ahead and look at Seoul, and then I'm gonna look at Canadian Solar, and then I'm gonna go down the list. So let me go ahead and take care of everybody else's statements before. But yeah, no, TR Kobe, I'm with you. That's gonna be one of those that you want to go ahead and enjoy the momentum. It looks nice. I like the strength, and also, you know, if ARCX took a position in it, it's just something you want to watch and see if she, Kathy Wood, unloads it, because she tends to do that sometimes. She adds certain stocks, makes it look cool, and then all of a sudden gets rid of it. She's done that several times, so you always want to look for those that she's pretty stable with. But right now, ARCX, whatever she's picking up seems pretty legit and something that she seems to want to hold or build upon. So we'll see what's going to go on with that. So Seoul. Well, Seoul had a big run in December all the way up to January of $36, and it's been falling since, okay? I'm going to actually pull up some extra indicators here so we can look at this from a lot more deeper perspective, because this chart is looking kind of weak. So right now where it's sitting, if you look at the RSI on the 30-minute and the MACD, it's showing weakness. Like, it went up, but it's showing weakness here, and that's that slight movement upwards. And then here on the MACD, it's been wanting to fall, and it's showing signs. Like these red bars here, this right here needs to change into green bars moving forward, right? Like getting bigger and bigger over time for this to start to build momentum. We're kind of close to the 50-day moving average. You know, if I pull up the 1 day, it might even look a little uglier. I'm not trying to discourage you if you're invested in this or you're thinking about this, because I'm not here to tell you guys to buy, sell, or hold any positions. I'm just going off of what I know. But when you look at the 1 day, it shows you like it's coming back up. So in the 30-minute chart frame, it's showing us that there's a possibility that there's going to be a little bit of a pullback maybe tomorrow. Maybe. And if we get that pullback, hopefully this doesn't go too far down, because if it does, it can continue like this image right here. You see what happened here? How it kind of bounced back. That's what we're seeing right now. And if it pulls back tomorrow, it might end up back into kind of the oversold area. And those are the moments that you really want to watch the stock for weakness. And if you believe in it, those are the opportunities to then ride it back up, like you could see from here to here. But you really got to know what you're doing in the stock. I mean, this was a penny stock before, so there's some things to watch. But let's go ahead and look at the resistance and support that you want to watch for tomorrow. So the first thing I want you guys to see here is the 50-day moving average. 1118, 1115, give or take, that's the 50-day moving average. Anything below it is bearish. Anything above it is bullish. Now, the support here is 1150. If that gets broken through, you want to watch that carefully and pay close attention to it. Now, what the bulls need a breakthrough to continue the momentum from here all the way up to here with the dip and then continue up, they need to break through this point here of 1243. Keep that in mind. If they do, their next goal would actually be at this candlestick here of $13. So keep that in mind for tomorrow. So let's see here. Nokia was doing 5G deal. Anybody see that? Let's look at Canadian Solar and TR Kobe. You're welcome, brother. Let's go ahead and see here. Canadian. Wait. What the heck? I keep writing it. There we go. So, Canadian Solar. I'm going to be honest with you. I like Canadian companies when it comes to energy. I'm going to be honest with you guys. I have a few that I like a lot, and there's some that are pretty weak, because some of these energy stocks are like the ones that we have here in America that seem like they're going to run up and be something big, and then all of a sudden they run up and then they fall. Now, you always want to look at the bigger picture here, and this stock is very volatile over time, right? And some of the times it's been really strong is close to every single time we've had a pullback, and then after the pullback of the overall market, it runs up. Like back in 2008, you can see it running up. Then 2013, 14, and then 2018, it was kind of stagnant, and it ran up a little bit from 17 to 18, almost leading into the beginning of 18. So this stock is a little bit too volatile for my liking, but it actually has been growing significantly since last year. So something's happened in the company that they've changed things around, either new CEO, new way of thinking about their whole entire, structure of their company. Let's look at the financials. Probably that can give us some more insight on what has been going on with this company. So they've been profitable, so nothing's really changed. Actually, they were the most profitable in 2018, so they're doing something different. So let's go ahead and look at this chart here. So it moves very slow. That's something I want you guys to be aware of. Some of these energy stocks, especially the ones that tend to be from Canada or Canadian, they do move very slow, but they're very volatile when it comes to looking at the overall chart on how long it takes dipping and how long it takes going back up, right? So like we saw on the one-day chart and the history. So right here, we have the 50-day moving average. That's 47.47. I want you guys to go ahead and be aware of that. Anything above that is bullish. Anything below that is bearish. Now, the support here I would look at is $48. Like, just round that down. Super important. If that gets broken through, you're getting closer to 47.47. You're just 43 cents away from there to go ahead and have to pay close attention to see what's going on. So, super, super important. Now, and excuse me, I said 53 cents that you're away from that you want to pay close attention to. Now, the resistance level is the highest point reached in the day, and that's 50.47. That needs to be broken through by the bulls to reach newer highs and new resistance levels. This company here, though, it's profitable. I'm not sure for the volatility in the past, but its profitability is a little weak. Like, if you look at this here, $3 billion in revenue and $100 million in profit. That's a big spread, okay? They're doing a lot more work. You got to think of it this way. They're doing a lot more work and getting a lot less done. Think about it that way, okay? The efficiency. Something's off in their structure, but overall, this stock has potential, and it could possibly reach back to these numbers if the momentum continues. Very interesting stock. Let's see here. Let's see. Let's go ahead and pull this up. Just bear with me, guys. I'm trying to pull up the chat here so I could see what it is that you guys said. But I saw some people talking about AT&T. What do I think about AT&T? So AT&T is definitely one that you want to go ahead and have on your watch list. For sure, always. I don't think there's anything wrong with this stock. Overall, they got dividends. They got everything. The only thing I didn't like for last year's reports is the fact that this stock actually does not have a profitable quarter. I think it was a profitable year. It was very interesting to me to see them go through that. That was something that, honestly, I was a little confused about. Why is it like that, But let's go ahead and see here. Oh, thoughts on NNDM. I'm going to talk about that in just a moment. But AT&T, okay, we pulled it up. We pulled it up here. Thoughts on AT&T. Saw Nokia was doing a 5G deal with AT&T. Anybody see that? I saw something about that in one of the articles. We got to see if it's actually true. I'm not sure. There has to be more information. But let's go ahead and look at it. So what are my thoughts on AT&T? This is the only thing I did not like for the first time. 2020. Look at that. 171 billion in revenue. Net income, 5 billion. Negative 5 billion, excuse me. That was the first time they have not been profitable in years, okay? Let's just blame it on 2020, okay? The 2020 has been a hard year for the stock market. So let's just blame it on that. This stock will actually start to perform really strong, right? Going deeper into 5G and keep on going higher if they can reverse from this. Because remember, now we are in a different market. And I've talked about this before, okay? Where valuations matter, earnings per share is like significant, and then, you know, the whole entire income statement of the quarterly results, like how are they doing, right? Are they profitable? Are they making money? Are they not making money? Stuff like that. So very interesting to me that they had a terrible year, and it's going to be funny because they might become profitable in 2021, 2022 moving forward, and it's going to turn this around. Their EPS is going to be like outstanding, and it's going to be a surprise, and then people are going to be playing this by earnings because a lot of people do. You could see that earnings is coming up, right? Supposedly on April 22nd, and it's already running up. You're going to notice, and I want you guys to mark my words, that closer to earnings or right after it, this is going to take a dump. It's going to fall. But I don't think it's going to fall back to 27 or even 26. It might fall back to 29, 28. I'd be surprised if it falls back to those numbers. If it does, then there's some weakness in AT&T overall. But a lot of investors ride this one up towards earnings, and then they dump it, or they ride it up towards dividends in different quarters. But this stock, if it could turn around and become very profitable with everything going on in 5G, and, you know, their streaming services, like they get better at it, and then, you know, the phones and this and that, you know, this stock may start to rise, and it's all going to be because they recovered from a terrible year of negative $5 billion, okay? And their earnings is going to be like spectacular. It's going to allow them to look like they're doing great because of where they came from. But if they didn't have a terrible year and every year was profitable, and even 2020, they would have to beat the previous year's profitability so that they can look better. So I don't know if this is a setup or this is just what happened and it's going to work out in AT&T's favor. How far up do I think AT&T can go? I mean, that's kind of hard because AT&T is way too stable. But when you look back at the highs of 2019, 2017, maybe those numbers can be touched again. Anywhere between $35 to $42, I'd say. It's not like you're going to get nothing crazy out of this. But we'll have to see. We'll have to see what happens. Maybe it could break through all of that. We'll be surprised. We'll be surprised. It'll actually show us. But that's what I'm seeing in this chart right now. But overall, dividends is strong in this stock. And I hope that this stock can recover from a negative profitability standpoint, because that is not a good direction for a company. So, thoughts on ICDM. Somebody said ICDM. Let's go ahead and look at that. ICDM. Oh, that's probably over-the-counter market. Yeah, I can't pull those up here. I would have to go to another brokerage or something like that. Plus, I kind of try to stay away from those stocks, if I'm honest, because they're way too risky. Way too risky. There's always risk, but I try to focus on maximizing profits and minimizing losses. So let's go ahead and see here. Thoughts on oil. James, what do you mean by oil? Do you mean oil like U.S. oil right here? What's going on right here? Is that what you're talking about? Or you mean like stocks with oil? Like what is it that you're regarding to? If you can go ahead and tell me, I'll go ahead and look at that. But let's look at NNDM. So NNDM. Guys, write down below what you guys want me to take a look at, and any thoughts that you want me to share. So NNDM, my thoughts on NNDM. This is one that we talk about every single day. We watch ARK Invest, how they position themselves, and what do I feel about NNDM? NNDM is a high risk stock because you are investing in the future, okay? This hasn't become a reality yet, okay? This is something that is still developing to become a reality, okay? NNDM has barely sold their machines, but their machines are kind of affordable, which is something I've looked into compared to what they can do. A lot of people say, oh, 100,000, 200,000 is expensive for that 3D printer. Well, that 3D printer can generate that money 10 folds, maybe 100 folds over time, especially if you can find, a niche product or, work with something that NNDM's 3D printer can do. We know how Cathie Wood feels about this one. This is definitely one you have to be patient with. And if you believe in the company and you believe in what they're looking at and looking forward to do, the acquisitions, all the cash on hand, we're hoping as investors that this is actually going to be used correctly. I mean, this stock could definitely break out away from $18. I think this is a $50 stock. That's just my opinion. Don't take that as financial advice. That's just how I feel. It's just when the matter of the question is when. When is it going to be $15, right? That could take probably a year or two easily. Worst case scenario, 3 to 5. But that's what investing is. You want to get in on early, right? When ARK Invest was loading up down here, and I've talked about this before, they were focusing on the bigger picture. And look at the bigger picture. Look what it's painted. Okay? Back here, we used to talk about NNDM every single day, how ARK Invest was buying and buying and buying, offering after offering after offering. Now, I always said, ARK Invest sees a picture that we can't see beyond the charts. Okay? This is the only picture we knew at that time. Look at what the picture has drawn out. I mean, look at this. This beauty right here. What a run. Okay, now I know that big pullback, but opportunity again, another run, slight pullback. What I'm looking for is this going to consolidate within this area, right? Try to stay within this channel, or is this going to actually break out of this and then pull back down, right? So we want to see that. Right now, it looks like it's hanging in within that area. Anything above $6, $6.50 is strong. A lot of institutional investors are owning this around $5.50-ish, around that area. ARK Invest has been buying way before that. But, those direct offerings, you're not the only one married to this stock. It's a whole bunch of institutional investors that were buying those direct offerings. So you got to think about what they see, right? How they feel. They're bag holding right now too, millions of dollars, not thousands, not a couple hundred. They're bag holding big. So I do want every single investor and viewer to be aware that, this is a long-term play, especially with everything going on about how this can contribute to the EV market, the space market, and all that stuff. Now, there's another one that Cathie Wood has actually been adding to before the merger, and I talked about this over at the Patreon as well, and that's this one right here, A1. Okay, as it was dipping, she was buying. As it was going up, she was buying. It reached a high here of $13, dropped right down to about 10 and some change, and now it's sitting at $11 and some change. This is definitely one to watch. Okay, I do want investors to be aware of that, and I'm monitoring this, how ARK Invest is reacting to it, and the merger hasn't happened. It's going to be with Mark Forged, if you guys want to go ahead and search them up. I mean, their website's pretty cool, and you definitely should go check out more information on them to understand the company and the SPAC merger. But this is another one in the 3D printing space. Something that we're waiting for is how many of these 3D printing companies are actually going to go to ARC-X, okay? That's what people are excited for. So we're going to have to see that. So let's see here. ARC-X. How to best short-term investment. Also AMC stock. Oh, did you hit AIV? Did not hear it. Was curious if you Toyota Motors long-term hold. In my opinion, best coverage. Toyota Motors, man. I am an advocate for that company, but I don't like their stock, man. Toyota Motors, really? You like that stock? I don't really like that stock. I love their company. I love what they do. I love, how they do things. But I don't know. I mean, I feel like for the little guys, it's a little too late for us. And when I say little guys, I'm talking about even if you put $10,000 in this company, what are you going to get back? I mean, what do you think? It's going to hit 300? Like Toyota Motors, man. This has to real unless you're doing options plays. I don't feel so. I love this company. Don't get me wrong. And I love their product. Man, their Tacoma and Hilux, one of the best cars. And when it comes to small trucks. So let's see here. Best short-term investment. Well, best short-term investment, that's a good question, but it just varies. And it has to do a lot with, your risk tolerance. One of the best short-term right now that I think is a quick play, like super quick if you're not in it, would be Ocugen going into April, but it has high risk. Everything has high risk, right? Because you don't know if that FDA approval clearance of emergency use happens, but that's what we're waiting for. And I see your question there. What is it? Serafine, right? Serafine Padilla on Ocugen. I'm going to talk about that in just a moment. Like, I'm going to go to the chart, but I have others first to see here on the list. Dude, I got you, bro. I got you. I'm talking to everybody. I got you. I see you, CA. I see all of you. I appreciate your guys' time, man. I appreciate your time. Let me jump on that one. So, let's see. AIV. Let's look at that. Oh, man. Don't tell. That's over the counter? Is that over the counter? Is that a penny stock? Because it doesn't show me penny stocks here. And I don't want to go to another platform and they have to log in and stuff. Because I try to stay away from penny stocks. Specifically here in the channel. I think it's too high risk to be talking about it. To share with people. Especially when people, let me give you guys some insight on how I feel about penny stocks. When people buy penny stocks, they feel comfortable in the penny stock or cool or awesome because they buy $100 of a penny stock and they own 1 million shares. Okay? There's no reason to focus on how many shares you own if you're not going to get dividends from it. And if you're trying to go ahead and let's say, for example, let me just show you guys an example. Let me give you guys this one right here. SNDL is right there. If you were to put, $100 right here at 120, right? And it ran up to $3 and some change, you would have made a total amount of $200 almost, right? On that run right there. But then in this same time frame here, right here, the 5th of March to here, you would have only made like around, let's just say a dollar, and then it ran up to 170, $70. Okay. Now I'm going to click on Apple and it might work as an example or it might not, but let's go ahead and see here. So on this run here in January, when it happened, you would have put 126 and you would have made $20. I get it. And then it fell down and you would have caught it here at 116 and then you would have made about $10 here. In that penny stock here, SNDL, the problem is you don't know exactly when you're supposed to sell. Sometimes you think there's more room, then you see it falling. You're like, this is just, for a temporary pullback, nothing too serious, this and that. It's at 104, ran up to 124 and stuff like that. And it just made you feel like, it's just going to go up and it's going to pull back down. We're going to run back up. And then you end up actually not selling or making any gains. In Apple, even if you didn't know when to sell, you're still almost at break even. Like you're not really losing money. Your $100 still kind of holds some value. And if you were to hold that $1 in the long term, SNDL, it might run up. Okay, this is just an example. And it could give you more, right? It can give you 300, 400, because this could possibly 4x, 5x. But the chances are a lot lower. And then Apple could actually steadily rise to 170, 220, and you could possibly make $100, you know? So I try to find more of like stable stocks when I'm talking about stocks or suggesting stocks towards the end of the videos to add to your watch list. And I try to stay away from penny stocks for those reasons, especially learning and beginning investors. So AIV on Robinhood. What do you mean, bro? I don't see that stock. I don't see that stock. What do they do? What do they do? Who are they? And I'm gonna try to find it. I'll try to find it here on my phone or something. AIV. Is it a SPAC? Are you sure it's ACIV? Or you're not confused with? Let me see AIV. And I apologize, brother. I know that you were waiting, and it seemed like I was skipping you. I saw your comment on AIV. Apartment Investment and Management. I mean, it had a big drop back in December. It doesn't look so good. Let me see here. Let's see some. That's like. Let me see. AIV Apartment Investment and Management. I mean, real estate is booming right now. So I could see why that stock has potential. But it had a big drop. Either it was I don't know. It switched from somewhere else to another. I don't know, because they usually do stuff like that. Let's see here. Bear with me, guys. I'm trying to help a brother out here. I'm all about helping a brother out and informing everyone. Heavy fintech. Let's see. Yeah, no, apartment management. I mean, like you said, it's very good dividend. Just be careful because there's some value traps out there with these dividends that they try to catch you. They say, oh, we have really good dividends. And then let's say the stock falls a few cents and yeah, their dividends is great, but it doesn't overpay what you lost. Okay, you want to think about that. I think that's one of the most important things. There's some dividend stocks out there that are traps because of the fact that, look, for example, if that dividend yield was being paid and in November 2020, just 3 months ago, right, or 4 months ago, if this was really at $40, as it says here, and it dropped down to $5, you think that dividends is going to pay you back all those losses? That was almost a 400% loss, 500% loss. And dividends is only giving you about almost 50% with the 42%. So, I mean, if you're looking to ride this into, the next coming, dividend, that's cool. Payout and then probably get out. I don't know, unless you're seeing this as a long term, but that was a big drop. Okay. I'm not too sure why it dropped though. That's something that I'm trying to understand here. But yeah, anything with real estate seems like a good diversification. Now I'm looking here at different institutional ownerships here on my phone, and there's a lot of top dogs here. BlackRock, Vanguard. It might be a good opportunity. I'm not sure if you're invested in it already or not, but something to probably consider. I don't know. And those of you watching, go check it out. And if you want to comment your thoughts on this one down below, you can as I'm speaking. Let's go ahead and look at another ticker symbol. Let's see here. Yeah, we blocked them. Thank you, TR Kobe, for letting me know. So I got a little piece of Toyota put away. It's not a huge position, but it's big enough. They're already on top of the game in the entire world. If they create a more reliable electric car than anybody else, the stock will blow up. And right now, you know that Toyota said to be the one to have right now one of the best solid state battery innovations, right? Like they just haven't released it, and they've been taking it easy. I've seen videos. They say this like so like calmly. We're letting everybody else take the lead because we're already ahead, and we're letting them have their fair share. And once we come, we're gonna take over. That's literally what they've said. In other words, what I've seen. All right, let's go back up because we got some things. Oh, AMC. Oh my gosh, there's a lot here. Okay, we got to go back up to Ocugen. Let's go back up to Ocugen because I skipped some there, man. There's so many of you guys. I apologize. I'm trying to, it's my first time actually doing this. I'm enjoying it, and I hope you guys are too. But let's go ahead and look at it here. So here we are with Ocugen. So what are my thoughts? Like truly, I feel like this has opportunity to take a piece of the pie. This just needs to get the FDA emergency use approval. Today I did a video on it, and this is probably one of the most important support levels. I've been talking about $6 since way back here and as this whole entire journey, and something that I have circled in this arrow here, I left it from way back in January. I never deleted it so that it could stay there, and I'm seeing something similar in the whole entire chart. I've mentioned this before. You could see here there's a little peak right in this downward trend. Well, there's our peak. And then what are we doing? We're going downwards. Okay. This stock, a lot of investors lost hope when it hit 130, jumped back up to 160, and it was just sitting there close to 180. Look what happened soon after. Look at that. Okay. I'm not saying we're going to have that run again because that was a lot of speculation and hype from investors, and supposedly this even ended up on WSB, Wall Street Bets. I didn't even know that. I don't pay much attention to that. But, you know, it was very interesting, and it made it run even higher. You know, analysis ratings were coming out that this was an $8 stock, $14 stock, and then boom. And then now we've cooled off. And this stock, all it needs is news. I always told the investors way back here, if you watch my videos and you are a subscriber and viewer since December, I always told you guys, remember why this ran up, okay? This ran up because of the fact that it was stated there was going to be a partnership, Ocugen and Borat company, or Bharat, all right, biotech company with Covaxin. And then it ran up again because it got emergency use approval in India. This was only running on news, okay? And now that's all this stock needs for the next catalyst. Now, I don't know how low this can go, but you definitely want to watch it if it gets lower than $5.86 or close to $6 again. But this was a big run today, and I think that we're already moving in the direction of anticipation for that FDA emergency use here in the US. So, interesting stuff. We'll see, because it could actually get neglected, and that's going to be ugly for the stock. I've said that since way back here. But that pattern downwards and that spike in the middle, you know, we look at this. This is a bigger version of that small version down there, and it kind of looks similar to me. And now the only piece that's missing is this one right here, right? That's the one we want. So hopefully it happens. And it looks like it could happen in April, possibly. All right. Let's see here. And then I got asked about AMC, and then we're going down the list. So AMC, I know a lot of investors want to hear good stuff about AMC, man. AMC is something that, honestly, it had a lot of volatility. And when you think about stocks, you got to think about their strength, right? And, where they came from. This is always, I talk about this in every video. If you want to learn more about stocks and charts and indicators and the psychology and, the emotional intelligence of the stock market, which I'm going to start doing a series once a week. And then there's going to be another section or tier for those of you that want it, but it's going to be twice every 2 weeks, twice a month. And it's going to be over at the Patreon. So if you guys are interested in that, you want to learn more, you want to grow more in your investing opportunities or journey, you can definitely join us. We have some great stock picks that I've mentioned over there, which I'm going to show in just a moment, so you guys can see how they've ran up and when I talked about them. And the link is down below. You can always join us over there whenever you feel ready. And for 13 cents a day is the first tier. That's the $4 tier. But let's go ahead and talk about AMC. So I talk about this in all my videos. And one of the things is you always want to remember where the stock came from. This stock came from $2, okay? It's way above that. It's 5x that right now, if you think about it. So a lot of investors sometimes want a stock to run up 10x from where it's at right now, like another 10x or another 5x. That's really hard for it to happen that fast. Now, I did a video about AMC, like I think back in March 11th or the 15th, and I talked about GameStop and AMC together. And out of the two, I think AMC has potential, but it's going to be short-lived, okay? It's going to be part of the reopening plays and stuff like that, and then probably a short squeeze like everybody's expecting, and that's about it. But I don't think it's going to be as big as this short squeeze, like going from $2 to $25. So think about $10 as $2, but it's not going to go up to $25. If anything, it'll go up to $10. So it'll 5x probably from here, 3x from here if a short squeeze does happen. Best case scenario. Worst case scenario, you'll see it hit $20, $25. That's about it. I do want you guys to be aware of that, which would be like around 2x, 2.5x, if anything happens. But when you really think about the strength of the stock is holding up pretty well. But from down here, if you're an investor that got in while this was running up or on the way down, and then you sold on the way up, and then you bought again somewhere in the middle to ride this up again, and now you're just kind of at break even, you've been playing with the ride, and you're expecting the ride to continue even higher, and that's what everybody with the short squeeze is looking for. Now, I'm not saying it's not possible, but fundamentally, you want to always think about, how many times could this really happen? And then this is the other thing I pointed out. Where are the peaks going, right? Like, think about that. Which way are they heading? Are they heading higher? Or are they heading lower? So my perspective is that we consolidate. We might go up higher, let's just say, probably, right? And fall back down, spike up again, because this is going to keep having this type of pattern for a little bit, again and again. And when you think about it, these spikes are going to go lower and lower. And this is if a short squeeze could happen. If it can't, and things get a little tough, this is what I'm seeing. A little spike, drop down, consolidation, a little spike, drop down, consolidation. And this is probably me talking months out, okay? This is not something that's going to happen in just a few weeks, over the course of the year. The biggest opportunity for AMC right now is the reopening plays and the runs with the reopening plays. But it seems like AMC is not getting that love that it was expecting to get so far. But there is that pending, moment that everyone's waiting for that says it's a possibility. I'm not quite sure. I'm not really that speculative. I like to maximize profits and minimize losses. And I like to look at, things without as much greed as possible. But when I look at this, the direction is down, but it doesn't mean that I'm right. Okay. I don't want you guys to ever think that. I'm just, stating what I see and how I feel. But if you're an investor that got in around $2-3, that's profits. Profits are profits. Move on and find another play, and find a better one. Or take something and leave whatever you're ready to risk for that possible opportunity of a run. Maybe. Who knows, right? But one thing I do know is that I don't think it could touch past 25. It can get probably close to it again, $20. And if not, anywhere between $15 to $20. That's going to be like the hype. But this is sitting pretty well above, that $2, $3, $4, $5 range, which is pretty good for a stock overall, but not for someone looking for a short squeeze, right? All right. How big of a pie do you think Ride will capture in 1 to 2 years? Well, Ride right now is going through a lot of turbulence, and it's having a lot of issues. A lot of issues. But one thing I do know is that they got their piece out there. I don't know how big of the pie it could be, but they got their piece. I'm sure they got a piece out there for themselves, especially with that endurance truck. Now, I know I see TR Kobe saying that the endurance truck revealed by Lordstown today. I'm still really suspicious about that stock. So the endurance truck is pretty badass. Excuse my French, but I think it's pretty cool. I think it's awesome. And what they do, I don't know if you've gone to the website. Go straight to Lordstown Motors website and go to the bottom. Just go to the bottom. I showed it in my previous video. And you'll see how they use, marketing tactics. Just look at the setup of the numbers. I love it because I was once a car salesman. And I could see how they actually did that. I actually was once a car salesman, and now I'm a full-time trader. And I do this, the YouTube videos for you guys because I enjoy doing it. But the way they break it down is pretty cool. And they put the credit for EV cars and EV trucks or whatever in there. And then they also show you the cost that you're going to save when not using diesel and using electricity. And just check it out. It's pretty cool. But the question to what's their, piece of the pie, I'm not sure. They got to beat F-150 first. F-150 historically has been the truck of America. I don't think Workhorse is just going to come and steal Ford's spotlight. That'll be pretty hard. But if Ford doesn't pick up the pace and makes not the endurance, but, the resilient, I would call it, or the perseverance truck, they're going to have issues trying to compete with the endurance truck for sure. And they might lose that piece or that spotlight over time. Daryl Lorenzo, I see your comments. I'm really glad to see that my videos have been very helpful. And I appreciate that. And Casa de Gomez, thank you, sir. Thank you for joining us over at the Patreon. And then I hope that you're enjoying those ticker symbols that we mentioned over there that show opportunity. There's some great ones. So, Daryl Lorenzo, I'm really glad. I'm glad that my videos have helped you so much. And I'm glad. I'm glad that everybody that watches my videos, it's going well for them. That's the whole purpose, to maximize profits, minimize losses, So one thing I do want you guys to know, that if you guys don't know, if you just started the live chat here and the streaming and you just joined, is that I have, the Patreon. The Patreon is definitely a place where you're going to actually gain more opportunity to learn more about the market and maximize profits for sure. I'm making sure that every single stock that I watch and I add to my watch list has value. I would never share with you guys something that I would not consider to share with myself, third person, right? I think about you guys first as well as if I was thinking about myself. So that's just the way it is, man. I enjoy investing and I enjoy, everything about stocks. So when you join the Patreon, you're actually allowing me to have more time to research stocks and share more stocks and stuff like that. But let's go ahead and get on it. Yo, Nick. I got you, bro. I got you. I'm over here looking at the list. You got Amid with GSAT above you, and I'm coming right for you, brother. I'm coming right for you. So let's go ahead and go for it. All right, so here we have GSAT. GSAT, I like GSAT, but they're a penny stock. They have some great opportunities with Qualcomm. They have some great opportunities going for them with Nokia, and they have others coming, right? I think I even saw something possibly with Samsung. I'm not sure if I'm correct on that, or that was another company. But GSAT keeps on bouncing around that 115, 120 area, right? And then it just bounces back up. We've seen it touch it twice. As long as this doesn't go below $1, I think there's some strength. But institutional ownership is pretty big, but they got in way down here in the 30-cent range. So you really want to watch closely the 115, $1. The 50-day moving average currently, as I'm speaking, is 129. This is sitting at 137. And right here is our resistance at 142 for tomorrow to see if this can continue the momentum. And possibly for next week, you would want to pay close attention to 160, 170 range to see if this can run up to newer highs and continue the momentum. But long term, 5G, it's the risk that you're taking. And 5G stocks right now seem kind of stagnant. They're not really like running. They're kind of working their way up. But then there's others that are bigger players that cost like $30, $40, $50 and they're running. So, I feel like this kind of has the penny stock syndrome, which is what I call it. That at the end of the day, it's a penny stock and the risk to reward is there, right? Higher risk, higher reward, or, you jump into a high risk and there is no reward. Those are the things you always want to remember. But, institutional ownership got in down here. So far, they're holding. I haven't seen any big institutional owners sell out. And it's holding the stock up above $1, which is really, really important. So, let's go for Nick. All right. CSCW. Okay, perfect. I was about to say, if this is over the counter, we have a problem here because it might not come up. But, okay, Colorstar Technology. I like them. These guys are out in China, right? These guys out in China? Where are they? No, it's in New York. This is not the company. Okay, so this is not the company I thought it was. Okay, there's a company that has the name Color in it, and I think Color something Technologies, and it's based out in Japan or China, and they have some potential going for them, and it's a penny stock like this one. But anyways, Colorstar Technology. This has been running up since the lows here of 50 cents. In the beginning of March, almost the middle of March, it started to fall and then it hit that low and it's running back up. But let me zoom out a little bit here and see what's going on. So, whoa. Okay, this is a penny stock that has taken a beating and it's had reverse splits, if we're honest here. Yeah, no, this is actually pretty weak, my friend. Now, you want to go ahead and keep in mind that the only way it can get out of here and break out to $2 significantly and keep on going with this momentum is if they got a new innovation, they start becoming profitable. I mean, look at this. No profitability, okay, in the annual, and they don't even let us see the quarter. This is one of those penny stocks that, as you could see here, it was very stagnant downwards, and then it started to come back up and down, fell really hard to 50 cents, and right now it's 3x. It hit a high here of almost 5x plus, and then now it's just, runs up, falls down, ran up, and it's falling down. So the question is it going to keep hitting newer highs, newer lows, newer highs, newer lows, or was this just temporary, and all of a sudden we start seeing something like this, and it starts hitting newer highs, newer lows in the downward direction, right? Not in the upward. So this is more of a momentum play, very risky. and I don't know much about the company. I thought this was the other company that I once searched and did research on, and they're not too bad. But I actually like to weigh out what stocks make more sense than others. Let's go ahead and look at the others. You're welcome, Nick. You're welcome. Be very careful with this one. This is a red flag in my opinion, Nick. Yeah, strong future. Of course. GACT does have future going for it. Yes, it does. AZRX. Let's see here. AZRX. If you guys have any stocks you want me to take a look at, we can talk about the charts. And I'm about to just jump into telling you guys some of the stocks I believe in April have potential. We're about to jump into that. So when a stock dips like this, okay, right, you need to understand that it's because something went wrong, especially in the health field overall. Okay, because this wasn't running like crazy in the last several days. It fell hard. So I would pay close attention to the support down here of 65, even here at 84 cents. It's sitting right now at 95. It dropped hard, right? At 4 p.m. it was at 134, and then it dropped hard to 95. I would not be surprised if this continues to sell off. Okay? Let me pull up here some different indicators here. Let's go ahead and see here. So yeah, here we have some different indicators I want us to take a look at. It could possibly bounce up. I'm not gonna lie. It could actually bounce up from here in the 30-minute, but in the 1 day, let's see how it looks. It possibly has room to fall closer, like to right here to $1. But no, it's not showing us the after-hour situation. That's the problem. So this probably fell down here. I don't know, probably a momentum play for tomorrow, something to watch. If you start seeing high volume and you start seeing it run up, it might be an opportunity. But that big drop there, that's a big hit. And you got to look and see what made it drop, because people might have not cared too much about this stock after that, and people might not even be looking at it tomorrow. So something to look at, okay? Something to keep in mind. Your support here is 90 cents. It's sitting at 95, and your resistance is way up here at 160. That was very volatile. Very volatile, very dangerous. I try to stay away from these stocks as much as possible. I say this all the time. All the time. Can I ask what trading firm you use for experience? You use BNGO Pro for research? What do you think is going to happen to Ocugen? This big drop right here, Daryl, is that what you're talking about? That big drop in this chart, because it's in the health technology, a big collapse? What was the FDA news? Was it like weak? Was it bad? Like it was negative? Because that's probably the big influence here. All right, let's see CTRM. Let's go ahead and take a look at CTRM. So before I jump into CTRM, actually, let me go ahead and share with you guys the top stocks I think are going to be important for, April. I mean, it can go well or it can go really bad. So the first one, we've talked about it several times here, is Ocugen. I want you guys to be aware of that. Ocugen is going to be an important one. We want to pay close attention. If this breaks through $5 or $6 and gets closer to $5.50, $5.80, you'll want to watch it carefully. And if the FDA approval hasn't came out yet, it might be opportunity, or it might be the beginning of weakness going downwards. Okay, that's going to be important. Now, Once that happens, I think April is going to be the month for OCGN stock, Ocugen Inc., and that's going to be interesting. Now, the other one is Pace. I shared it with you guys at the beginning for those of you guys that weren't watching. This one right here is a stock that I believe has potential once the merger happens. This is a SPAC merger with Nerdy. Look up that company. I compared it to Chegg in the past, okay? But this is just getting started. So this could be a merger momentum play, okay? It's sitting at $9. SPACs usually start off at $10 to $9. You're basically getting it at the beginning SPAC price. We saw it run up to 12. If it hits 12, that's a 30% gain for the month of April. And if it breaks through that and goes to 18, it's 100% right there. So you want to go ahead and pay close attention to this. If it hits 15, like 50 to 60, you know, it's all about not being greedy and just riding the waves. Okay, guys? Always. Now, the other one is PLTR. Okay, a lot of people are like, oh, we don't know what this one's worth. Like, you know, all the different analysis ratings, the articles on the news. I don't know if it's they don't want us to catch on to taking the opportunity on this one, or maybe this one is worth less. I don't know, because so much is out there. Comment down below if you've seen those videos before about, oh, we don't know what, you know, PLTR is worth. Oh, we don't know how, you know, high it could go. And oh, wait a second, real quick. AZRX failed in mid-stage cystic fibrosis. It's definitely a toast. Clinical trials. Okay, so for AZRX, I want you guys to be aware of something. I think I found another stock that has, I think it's about to get FDA approval on cystic fibrosis, if I'm not mistaken. I don't remember what it was, but that rings a bell. Look up CLBS for me and go find that one, because that's one of the ones I talked about for April, because the opportunities are looking pretty big. I think it's not CBL, it's not CLBS. Could it be 9 meters? Let me look this up here. 9 meters. There's one here that has to do with cystic fibrosis. Their technology. Stem cell. No, and CLBS has to do with cardiovascular. Man, who was it that had to do with this? Autoimmune. Man, I can't find it right now. I talked about it though. I talked about it a few weeks ago. So let's go ahead and talk about the stock here of the other month for April. So it's PLTR. So PLTR, okay, guys, I want you guys to be aware that PLTR, a lot of people are not completely sure yet on what it's worth, what PLTR is truly worth. A lot of people think that PLTR is worth less than 20. Some are saying it's more on the news and the analysis ratings. I mean, there's some shooting higher, some shooting lower. This is a stock to watch in April for sure, especially the way the momentum's already starting. But I've talked about it several times over at the Patreon, and I've said we want to pay close attention to that low here of $20, and it certainly reached it, and then it bounced back from it. So the closer this gets to $20, the bigger the opportunity. And I've even said $15 to $20 is a steal. You want to keep that in mind. So this is one to definitely watch and pay close attention to moving forward. I want you guys to be aware of that. Now, for April, we need to see if this run continues, because this could pull back tomorrow. Okay? The closer you get it at $20, the more interesting it is. But if it was to break below $20, I don't think it can go below 15. It'll fall somewhere between that, and the opportunity is just getting bigger and bigger. But very rare for that to happen. That's just me being very greedy and wanting it that low. But at $20, this is very enticing, very interesting, and this certainly could get back up to $30 to $40. I'm sure within this year or in the next few months. So that is something to keep in mind. This is definitely one to watch in April because it might have a run or it'll pull back and it's going to set itself up, right? That setback is a setup for the next run. So this is definitely one that a lot of investors are loving. Kathy Wood has said nothing but great things about this company overall and the sector it's in. And some people say it's probably worth $1 trillion. This could be the next Amazon, quote unquote, right? Google, Microsoft, stuff like that. All right. Oh, man. SENS and GHVI. We're going to talk about it in just a moment. So, let's see here. Jern. I think it's Jern. Oh, man. That's awesome. You remembered. Let me see here. Let me see if it's Jern. Jern Corp. Oh, man. Did I talk about this one? I'm not sure. I don't know if I talked about this one. If it is Jerome Corp, I gotta look into it, but we'll have to see. But yeah, the cystic fibrosis. There was a company though. So, all right. So we're gonna talk about SENS and GHVI. Those are two stocks I'm like super bullish on, and we're gonna look at in just a moment. Oh my God, yo, TR Kobe, he snapped. All right, man, I'm going to talk about that in just a moment too. And I'm actually going to tell you guys about a stock that out of that list that I actually am so bullish on. Just, oh my gosh, good stocks. Okay, so SENS. Let's talk about SENS. And after all of this, we're about to end it. So I do want you guys to hold on tight because we're going to talk about some really great stuff here these last few moments. So SENS stocks, okay? SENS stock, I believe this can 10x, and I said that from the $3 mark, okay? That's my bullishness on this one. How long? Just to be kind of conservative, 5 years from now. And if I want to be a little bit more, extravagant and speculative and make you guys like jump out of your chair and start jumping, maybe in 2 to 3 years, okay? I want you guys to be aware of that. If things go well, right, with the FDA approval of the 180 days with their continuous glucose monitor, it's game changing. People have so many, negative things to say about it, and then others have so many great things to say about it. So it's all about perspective, what side you're on, and then also how much do you know about the topic, right? And I had one of the subscribers and viewers and investors of the videos that I make comment down below, and he works for Medtronics, and he works with all these glucose monitors, and he's pretty bullish on SENS too. He actually corrected me and agreed with some of the things I said, so I appreciated that, and that gave me even more confirmation on how I feel about this one. So Sensonics, yeah, this could go back up to $5, $10 possibly this year. But long term, right, it's going to take really long. And I'm trying to say, so you guys can actually understand the emphasis. Long, I'm talking about years from now. And 5 years is the minimum of seeing this 10x. And 2 to 3 years is me being very speculative, right? Being hype. And I'm not really all about the hype. But that is the possibility here for this one. I want you guys to be aware of that. Now let's talk about the next one. The next one is GHVI. This one is huge stuff, okay? I am loving this stock more and more the closer it gets to $10, okay? If that gives you some insight on how I feel about this one, the closer to $10 it's so much better. Darion, hi, bro. Hi, welcome. Okay, so let's go ahead and see here with GHVI. So GHVI is awesome stock. Okay, The closer this gets to $10, the better. And the merger hasn't even happened. And look what happened. This ran up to $28. This is said to be the stock of the decade by articles and investors. Okay? Yeah, you just keep adding to it, right? I have never bought the dip so hard or so much in my life. Casa de Gomez, I saw your question. I was going to get right to it. I just wanted to go ahead and talk about these stocks. And I was going to mention that in just a moment. But you know what? So that you don't feel like I'm ignoring you, I apologize. I use various different platforms depending on what it is that I'm trying to do. But usually I use this chart. I use this platform here to look at the stocks throughout the day and even in the afternoon. I love the clarity that this has and provides. But I don't execute my orders here. I'll have this on one screen and then I look at, the screen on another one. But one of the most important things that I like about one of the trading platforms I use is how long you could use it, right? It's Webull. The time frame. You could do a lot on that platform, and they have some really good screeners, stuff like that, budget friendly. And they even give you 2 free stocks, right when you start. So you deposit $100 and you're already winning. That's one cool thing about it. And then apart from that, Webull actually allows you to trade, from 4 a.m. all the way to 8 p.m. Okay, you got like the whole spectrum, like the pre-market and the post market, right? And then also, not every single stock you can trade on there, but it depends. But where I actually trade, like beyond like, the Webull and using the trading view that I personally enjoy trading in, and I only do that for my long-term plays. I'm not really doing it for the day trades. I use like Webull and the trading view, as you could see here on the screen, is TD Ameritrade, and some people don't like it. I'm not here to use something people have to like. It's just I enjoy it. But Webull is awesome, Daryl. It is, certainly is. It's spectacular. But one thing I do want you to know is when I do my research, I look everywhere. I don't just use Benzinga Pro. I don't just use, Investor's Place, Wall Street Journal. I look everywhere. But I actually spend very little time looking for articles and news. This kind of sounds a little contradicting to what people hear or expect, but I stay away from doing that. And I focus in on the charts. All my due diligence is based on the charts because I like to quiet down the noise. Now, if I see a quick spike, right, like you could see here, let's actually get away from GHVI, and then we're going to come back to this. In Microvision, I don't have any fundamentals to tell me right away here in Microvision that this stock ran up. Okay, there's no fundamentals other than the fact that it happened so late, like towards the end of the day, that big run. So I have to look up articles, news, and stuff like that. But day-to-day basis, I stay away from all of that. I look at the news in the morning, maybe around the middle of the day, to kind of get a feel of what's going on. I look more at the news of the overall market, like the S&P 500, the Dow, stuff like that. I don't really look at the news for individual stocks. Unless I really, really need to, like that example. So back to GHVI. So GHVI is said to be the stock of the decade. I've been loading up on the way down. I love this one. I've been talking about it since it was dipping, right? Back in the beginning of March, and even right here around the middle of March. I've talked about it several times over at the Patreon for the members to be aware of this one. And when it dipped down here to $11, I honestly was not paying attention to the stock. And funny enough, I already had a position in it. I was so focused on other stocks. And it hit that low, and I wish I would have caught it. But at the end of the day, when it started running back up, I caught it around 13. And when it ran all the way up and it's been dipping, I've been buying on the dips. And I just want to own as many shares as I can about this one. It's not about, oh, I have this many shares. It's just the more I can buy at these levels, the more excited I am about not just the merger hype, but the future of this company. It's going to take about maybe 5 to 10 years. This is certainly going to possibly 10x to 100x. I'm being very bold. And I know that's a very broad stretch. The 10x will come before the 100x, but this could possibly be worth $1,000, $1,300 if these articles are correct. And we're going to have to see how things perform. What's the revenue of Matterport, which is the merger company, and all that fun stuff. But it's said to be one of the few stocks, right, that are part of the SPACs that have came out for 2020 and 2021 range to be one of the few successful ones to actually go throughout all of this and become pretty profitable, right? Or higher returns for the investors that got in early or got in at some point, okay? There's going to be some volatility this year going into the merger after. We'll have to see how things play out. But worst case scenario, this could be above $100. That's just looking at it from a very ugly perspective. Yeah. It spiked. It spiked at towards the end of the day. You're right about that right here. You can see that. But yeah, a lot of stocks were kind of running up. I've been buying this as much as I can. So let's go back. Okay. TR Kobe, if you're still here. I want to answer your question. And yeah, you can see it on Webull. Yeah. I pulled it up on my phone. I could see it there. It doesn't look the same here on what you're saying. It doesn't look as big. It was huge, right? It's a big jump, almost a whole dollar. Yeah. Those runs are going to keep happening. But TR Kobe, to answer your question, I know you've been waiting for this one a few minutes. Mercari, Wish, or Posh, or eBay. If you can comment down below if you're still here, brother, I'd appreciate it so I can go ahead and know I'm answering you. I don't want you to miss this. And if not, then I will comment this below. But yeah, which one would I own, right? Mercari, Wish, Posh, or eBay. If you had to buy only one and hold it for 3 years, which would you buy? Man. Dang. Yo, Ron. Ready Master. What's up, brother? I love you too, brother. Ron Truman. Who are you, bro? Who are you? How would you say that? Why would you say that? Are you in my Patreon? If you aren't, you should join. No, I'm just kidding. Yeah, it's up to you. But yeah. Why is Wish your guest, brother? Why would you say that? You gotta be on my Patreon. Been following it. Don't buy anything. LOL. Wait until Coinbase has its IPO. It's my recommendation. Been following it. Well, you're on to something, brother. Well, whenever you're ready, brother. Whenever you're ready, you can join us over at the Patreon, bro. It's all good. Yeah, man. If I had to pick out of all of those, he is correct. It is Wish. I've talked about it several times. I even made a video on it. And it's actually very high risk. That's why I love it. And I'm picking it out of all of those. Because when you look at some of the ones that TR Kobe, our brother TR Kobe mentioned, he basically said, Posh, which is kind of sitting at the 50s, eBay sitting around 50 to 70s, right? I'm not pulling up the charts right now, so I don't know. And then Mercari, they're all in that area. Now, the one that I feel most excited about is Wish. This is a stock that I believe has a lot of potential, and it has to reverse. It is not profitable, if I'm honest with you guys. This is where the risk sits. That we're talking about a stock that may lose all its value. Like, and that's what it's all about. You know what I mean? In the stock market sometimes, especially when you get in early. But I feel very confident. Institutional ownership is pretty strong. They just released recently 2-day shipping, which is one of their biggest issues as a company. Their shipping, right? Because it's so, complicated with the distance and this and that. So this one is definitely one that has a lot of hurdles to go through. I love how it's been falling downwards, and I've been buying. My average cost is $16, if I'm honest with you. I bought way up here, and then I bought down at 16, and I bought down here at 14, and I bought on the way back up, and I'm going to buy as it goes down, or if it goes up, I'm buying this one. But just because I am doesn't mean you have to. I definitely recommend doing your due diligence and research. This is just the one right now that seems to have the highest risk and highest return ratio in this sector. It could take 5 to 10 years before you see a return. I do want you guys to be aware of that. It could take 1 year. It could take 2 years on the much more bullish end, but it's going to take time. It's certainly going to take time. Been following you for about a month now. I don't belong to any investment groups, but been learning stock trading the hard way. You see in the Patreon soon. Well, I'm proud, man. I'm proud. I'm glad to have you part of the community here and Invest for Tomorrow. And that's how I learned. I learned the hard way too. And I've come a long way from where I was. So I respect that. But whenever you're ready, brother, whenever you're ready, if you want to join, I would be glad, privileged to have you join us. And Daryl, cool. Same, man. So TRO, I thought that was Arnie Maxwell. What do you think about AMC next week? Project a price for me. I actually went ahead and already talked to AMC, brother. And I basically said, we could probably see it go to $15 to $20 at most. And the best case scenario is $25. And I'm not saying in next week. I'm saying once this whole entire turbulence kind of gets better. And that's probably one of the best moments. Now, I could be completely wrong. And if the short squeeze that everyone's waiting for happens, this thing's going to run up to the sky. And it can basically break through 25 and stuff. But very high risk. I talked about where it's sitting and how it is. And I'm not too confident that stock's going to go much higher, like crazy higher, like it did the last time. Because remember, the cost per share is higher now. It's easier to make a stock run up from $2 to 25, but from 10 to 250 or 10 to 100, it's a lot harder. So, and I know a lot of people can argue, you could do it with GameStop. That was a whole different scenario and a whole different case because of the short float and all that stuff and all the things behind the scenes, right? But here we are with Wish again, as we were talking about. Yeah, this is the one I would like. This is the one I would hold for 3 years, 5 years, 10 years. This is said to be the dollar store on your phone type of deal, right? When you look at their items and what they sell, and when I look up dollar store or Dollar Tree, any of these, Dollar Tree, Dollar General, just look at this chart here. That's what I project for basically, a stock like Wish. I think about it this way. Look where it was at in the 95s. It was at $1, and it spent from like around 02 all the way to 08, sitting around to $9 to $10. That could happen that many years, 8 years, 6 years, 7 years of sideways movement for Wish. That could happen. Okay, you got to have that mindset to be prepared for that. But look what happened after 08. It ran up to 16, then it ran up to 25, 52, dropped back down to the 30s, shot up, and then when you look at it from that point forward, 08 all the way till 2021, right? That's a total of 13 years. It's basically 10x. So that's that type of way that I'm looking at this stock. And when you look at Dollar General, right? Same thing. And this started in 2010 at $20. This one is the one I kind of correlated to a little bit more, but it didn't start as volatile as Wish. When you look at Wish, it It started, it ran up, and it fell down. And that's right now, we haven't seen a true bottom. You know, it's looking like it's $15, $14. We're going to see what happens. But it could possibly go lower. But when you look at this stock, it started off for about almost an entire few months of a year, sitting from $22 to $26, only rising $4. And then it just kept rising and rising and rising. Big dip here in 2016 after hitting like 90, almost $100, down to the 60s. And then in 16 ran up till where it's at now in the 200s. Okay? So when I look at these $2 store perspectives, and they call Wish, and I like to call Wish the dollar store on your phone, these are the charts I think about. And that's the potential I'm looking for on Wish. And when I say, you know, Wish can reach it, I think about both perspectives. One took 10 years, 12 years to run up 10x, and the other one took 13 years, 14 years to 10x. Same thing with Wish. The only thing I think about Wish that can make it accelerate itself is that it's an e-commerce. Okay? You don't got to go to the store. Dollar General on your phone. Think about that. I know, man. I know institutional ownership is buying and going up and stuff like that. Why would they buy if they expect to lose? Because keep in mind that institutional owners can buy millions of shares and they just need to write it up $5 and they made $1 million. Think about that. And then us, the little guys, we buy $10,000. It goes up $5 and we only made $2,500. So yeah, they're buying, but the question is, how long are they looking to hold it for? Like, think about it. They're probably just taking advantage of probably riding it for the opportunity of right now, the recovery plays. That's what it's said to possibly be. That's about it. That's all I really see. And if it does run up, you know, it's going to be something that I was completely wrong. But I see a little bit of weakness in that chart, and I see not too much strength to go beyond $25. And if it does, what, $35, $30? It's not that much. It's only a 3x opportunity. But, you know, a lot of people are expecting a short squeeze like if it was GameStop. It could be possible. You're welcome, Casa. You're welcome, Casa de Gomez. You're welcome. You're welcome to all of you guys. I'm actually going to start heading out now. This is like about the end of this one. I know a lot of you guys were asking for CTRM, so I'm going to cover that and I'm done. And yeah, Arnie, Mr. Maxwell, that's exactly how I look at it. I mean, yeah, you said $5 would be cool, but it's not like the short squeeze that people were expecting, right? You want something wild, right? That's not going to happen, I think. I'm going to talk about CTRM. I got you. And I'm about to head out and call it a day, man. Call it a day. I wanted to try this. I hope you guys liked it. Comment down below if you want more videos like this so we can gather. If you guys want to do it on a specific day. I kind of just randomly did it. And I appreciate all of you guys that have stopped by and checked out the video and the stream. I mean, this was pretty cool and awesome. Maybe I'm going to start doing this in the mornings and stuff. We'll see what happens to talk about stocks and stuff. So, CTRM, man. CTRM, I've talked about this several times, and I've said if this stays above $1, we have strength. Okay? If it doesn't, it's getting very, very weak, and we have to be a little worried as investors. I have a small position in CTRM just for the sake of it and having fun with it. And my average cost is around 80 cents, okay? I want you guys to be aware of that. It's around the 80-cent range. And I caught that way, way back here in this dip. And I said, all right, I'm going to ride it. And it rode it up. I rode it up to $1.07, but that was just 20-cent gain. That was like 20%. That's not what I was looking for. I was actually looking for 100% return, like 160. So I like this stock because they're profitable. They've been profitable every single year except for 2020, okay? But when you go to the quarterly, 2020 they got hit because of everything going on with the corona. But before, they've been profitable since 2017, 2018, 2019. And the cool thing about their profitability is that they had a smaller fleet, a lot smaller fleet. Their fleet is growing and growing and growing. Now, the way it's growing, some people are saying, oh, well, they've grown, but a lot of those ships are just sitting there at the dock, getting barnacles, not doing anything. It's a waste of money and investment. And that's true. If it just sits there and does nothing, it is true. But I can only imagine how profitable this company can become. Post-COVID, if they can get back up above $1, hold themselves there, and start profiting, like becoming profitable, they will be able to be a lot more profitable than they've been before. And there's going to be a lot of growth expected. But, the stock's below $1. And that's one of the things that I'm still holding and I want to see. And if not, I'm just gonna paper lose it. Like, it's just gonna be a loss for the year. One of my losses for this year so far, and I'll just sell it wherever it falls. It's fine, and we'll see what happens. But one of the things I do want you guys to be aware of is 65 cents is critical. As long as we stay above it, there's a little bit of strength between that area and $1, but ideally this needs to go back up to $1. It is holding itself up pretty well above 70 cents, but it ran up to 85 cents and it's just been falling. So I see a lot of weakness here in this stock, but like I said, I could be completely wrong. April is said to be a good month for stocks overall. We'll see how April does. This could possibly run up with speculation and hype. Who knows? But how do you feel about it? Like, how do you feel about the expansions and what they've done? What do you think? You got 10K shares. Oh, brother. That's not bad. That's not bad. I mean, you're taking a high risk to your reward. So you're good. Yeah, you caught it a little bit lower than me. Yeah. You're welcome. You're welcome. And we'll see. We'll see if we'll do more. Look at that. CTRM average of 44 cents. Good lecture. Oh, man. Thank you so much. Thank you so much. And, yeah. CTRM is cool. I mean, I took a shot at it because I was doing so many videos and I said, you know what? I want to go ahead and actually feel this ride and go with everyone in it. But I caught it, around the 80-cent range, and I don't know what's going to happen because this stock has so much potential, but it has to break that $1 mark. I think that's like one of the biggest things. Yeah. It's fine. Oh, my Ethereum is carrying. Yeah. Ethereum, you can ride that out before you're thinking. Keep in mind that the halving is what makes these things run. Before I go, can you talk a bit about your Patreons? What do you mean by my Patreons? Like, what is it that I offer? Like, what's on it? What's up, bro? Titanic. What's up? Yeah, okay. So on the Patreon, you'll have different tiers, but every single tier right now gives you the same offer, okay? And the reason why I'm doing that is because I believe everyone should receive the opportunity, and I know some people are on different budgets. I remember when I started trading, I was on a budget. I'm still on a budget to this day, right? We always have to keep a budget so you can become more successful and stuff. But I was on a really tight budget, and the way I started trading, let me tell you guys a little bit about that first. I took 4 years and a half studying charts, okay? And I actually literally paper trade, like no pun intended on this one too, because I would grab a piece of paper and, for example, CTRM, if I liked the stock after I did the whole analysis, I'd say, okay, I just bought at 75 cents. And I would go ahead and watch it day after day, and I would write my sales and my buy orders, okay? I did that for 4 years and a half because I wanted to get into the market, but knowing how the market works, because if you think you can outsmart or beat the market, you are just one small ant in this big, massive world. And the way the technology is now and how fast things move, you will always get beat by the system. Always. So it's not that I try to beat the system. And I do that. And you have a Discord, we can all communicate quicker, etc. No way. You think Wish is a flash? Oh, man. Okay, I'm going to answer that in just a moment. So, basically, I went ahead and did that for some time. And I learned the whole entire stock market. I learned the terms. I learned everything. I actually went through different crashes. And when I say different crashes, I'm talking about way back to 2018. And I'm really glad I experienced those crashes right here in 2018. Look at this pullback here. That set me up and prepared me to have the mentality, emotional intelligence to know how to handle this pullback, and even more than ever, handle this pullback. Look how small this pullback was compared to the others. And everyone last month to now has been crying about it and making it a big deal, right? So we may be set up for another big pullback sometime in the near future, or even in the coming months, or in the next year, right? We're not too sure yet. But this set me up for that. I learned a lot there. And then I also went ahead and learned from all the different things going on back then, because I started 4 years and a half before 2019. So when you think about it, way back here in 2015. So I also went through this correction here, and this bull run, big crash / correction, bull run, okay? I learned a lot throughout that whole entire process. I wanted to learn charts. I wanted to learn how to maximize profits, minimize losses. And then last year, I was working full time, and then I started the YouTube channel, and I actually said, well, I want to help people, because it took me a long time, right? 4 years and a half, from 2015 all the way to 2019 and some change, without being involved in the market, like at all. Like I was just studying charts. But I treated it as if I was in the market. Then I started, penny stocks. I got burnt. I don't know how many of you guys watching right now have been burnt by penny stocks last year, this year, or in the past, but I got burnt. And all of a sudden, I started investing, like truly investing, this last bull run here towards the end of 2019, all the way up to this peak here of March, April 2020, February, and then it fell. I had already known how all of this works. So as soon as I started seeing pullbacks, I got out of the market. And ever since, I've been riding the market back up with different stocks that I'm watching, and I'm looking for opportunities beyond what this market has shown us or what we see. So I took a long time. Before getting into the market and actually applying my own hard-earned money. And I wanted to focus on not losing it. And I've actually become a pretty profitable trader with my strategy and my goals. But about the Patreon, I'm going to add a Discord soon, right? I'm going to go ahead and add that. And in that Discord, I plan on allowing those that are in the higher tiers. I'm not sure which tiers I'm going to pick from yet. I know the first two will not be included in this, but they're going to be included in knowing about it, right? Because I never want to leave anybody left behind. But you're going to know about, different, series and stuff like that. Because I'm going to do a series first to teach you guys everything that I learned in those 4.5 years, everything I'm learning now, and everything I continue to learn. So there's going to be more content applied to it every single time. So the one thing I want you guys to be aware that in the Patreon, you're going to receive that. And in the lower tiers, you're going to receive those series, but instead of every week, every 2 weeks. And then the third tier and above is going to have the Discord included. Or I'm not sure if I'm just going to include it for everyone. But the one thing I am going to make different is the series of learning, okay, about the charts and the stock market overall. Discord, I'm still figuring out what tiers I'm going to add it to. But in the Discord, we're going to talk about speculative plays. That is something I want you guys to be aware of. Speculative plays with big opportunity. And I'm going to call out stocks that are showing signs of running early on in the day. Okay, and we're going to be able to communicate faster, like you're saying, and all that stuff. Now, in the Patreon post, there's going to be weekly stocks that I share with you guys on the posts. And there's going to be stocks that I'm going to talk about throughout the week as they present themselves as an opportunity. So let me share with you a stock that I actually mentioned a week ago, which I mentioned towards the second half of today's video. And I'm going to share with you a stock that I mentioned last week, and it's already up too. So this one right here, right, is ChargePoint. So I talked about it on the 21st, or the 24th, 21st, I keep messing up. 21st, it was on the weekend. And then the 22nd, it ran up. Every single Patreon member, I've said this before, could have been like asking me questions. I thought you said this was going to pull down. And I talked about how this could reach the $20 mark again. If it falls below it, even bigger opportunity. Well, all it took was 3 days and it fell to $19. From $19, it's been running up. I said anything below $20, big opportunity. Anything further, closer to 15, even bigger, ran up. It's sitting right now at $26. The other one that I mentioned last week, and this one was in the middle of last week on the 24th, is Pinduoduo. Now, I talk about these stocks for you to actually think about them long-term first before thinking about them short-term. Because in the short term, there are quick opportunities, but then there's also the stagnation, and you got to think about the bigger picture. So I talked about this one back on 24th, exactly a week ago. And on the 24th, it was falling. The next morning, it hit 119. And the most recent high was 138, 139 up here. And it's sitting at 133. So from the moment I mentioned it, everyone's winning right now on this one per share, right? Like $20 to $15 per share. So opportunities are always going to be there. I'm always going to tell you guys, based off the charts, what is it that attracted me to it? What do I like about it? And the Discord's coming. The series is coming to learn more about the emotional intelligence, stock charts, stock chart patterns that I'm going to share with you guys. So many things so that you guys can be more equipped as investors, for your investing journey. And I wish that someone was there to teach me. I read a lot of books. And I spent a lot of time actually applying myself, long hours, going to school, working full time, and then treating trading like a part-time and looking at these charts and learning all about them. So there's going to be a lot over at the Patreon. I'm going to further develop it. I'm actually treating the Patreon like a stock. The earlier you get in, the bigger the opportunity, because there's right now 2 tiers that are $4 and $5. And once those get filled up, there's only a certain amount. Right now, I think one has like 80 and the other one has like 90 slots open. Once they get filled up, that's the end of it for those. And you're going to receive all the great opportunities, and information throughout the whole entire life of the span of the Patreon. Yeah, so just wait till tomorrow. Wait till tomorrow. Wait till uh the second, Ron. That is correct. That's the way it works. That's how it's set up in the Patreon that I have for the reasons of security, so that it actually goes through. I don't want anybody to try to hack. We don't need that in our society or our community, better said. So just wait for tomorrow. I could tell you sign up right now so you could charge twice, but that's not the whole point, man. I could care less about the charge, man. You know. Yeah, ready, Master, man. Thank you so much. I love you, brother. I appreciate the support. Appreciate the support from all of you guys, and that's what I'm here for, man. It took me a long time to learn, but I want to kind of condense it and equip everyone. Nah, man, nah. Wall Street goats, man, greatest of all time. Yeah, that's not what I'm here for, man. I'm actually making it budget friendly. Uh, because of the fact. Cool, Ron. Yeah, man. No problem. And if you're willing to join, man, you can always join tomorrow or wait till the second. However you feel more comfortable once it's already April, so that you don't get charged twice. But Wall Street goats, man. Yeah, no, that's not the plan, brother. That's not the plan. This is not about $100 a month, nothing like that. This is all about budget friendly. I actually want to be able to be more accessible to people that are on a budget. I know a lot of investors that watch my videos, and nobody has to say this, but they're investing only $100,000 a month, or that's all they really have in their portfolio, and they're hoping for it to grow. And I want to set, and I'm going to talk more about it on the Patreon, every single investor up for success. And I have a strategy, and it's a proven strategy that's worked for me, and I'm going to go ahead and share it with everyone. And just because it works for me doesn't mean it's going to work for you, but I'm sure it works because it's actually probably one of the simplest ways to set yourself up for success in the stock market. And then after you get that done, you can then go do riskier plays. A lot of people come into the market doing riskier plays first, and that's what I did, and I learned from that, and I want others to learn about that too. And that's how we all have something in common, because that's where we all start. And it's because we either watch a stock movie that led us there, and if not, we ended up watching Wolf of Wall Street, the penny stock, guru and stuff. But yeah, man, no, $100 a month, I'll never get that high. If my tiers do get filled up so much, there's gonna be a cap that I'm actually just gonna leave one of the tiers open. There's no limit slots, and that one's gonna be like probably the base price for joining at that point, because there's so much information you're going to obtain just from the moment you join. Because remember, when you join Patreon, you gain access to everything I talked about yesterday and in the last several months. And yeah. Hey, TR Kobe, brother, I appreciate the feedback. We're going to do this more often. And man, you asked me a question. You said Mercari or eBay. Man, it's hard. I would probably pick both. I would just tell you both, because eBay has potential. Mercari, they're both e-commerce. And you know what? Anything e-commerce is going to obtain market share from Amazon. I don't know if you guys have seen things stated, or if you've even seen when Jeff Bezos has talked about Amazon. Let's actually look at Amazon, how I reacted to this. But there's been a lot of posts lately saying how, yeah, look at that drop from the 3500s. I mean, it's touched it a few times and gotten rejected, but there's been a lot of saying, in the word of the street is that Amazon is going to collapse someday, but not completely, just collapse from being the top dog, or actually giving up some of its market share to the other companies that are coming up for just different reasons, different interests. But yeah, I mean, when you look at their profitability, it is so small. Like, look at that revenue, $300 billion, right? And they only get 21 billion. That's what's really hurting them, and it's what makes them successful too. Like, they make everything they're not trying to be greedy with the profits. If anything, they're trying to just go ahead and be profitable and do a quick turnover. You know, they're not thinking too much about quality, if not quantity. And I know they give quality and they have great service. I'm talking about when it comes to the quality of their profits. I think they're just, you know, just quantity. You know, every cent counts. You know, let's just get another dime. And they'll even like take some contracts at a loss with companies or anything like that, or on any of their services, just to get more revenue coming in, because revenue sometimes is more important to some investors than net income. And I like net income, but that's all about it. But yeah, all of those are pretty good, bro. All of them. Now, how you feel about Wish? Hey, that's why we're not meant to be the same, brother. You know? Yeah, man. Look forward to having all of you guys join. And when, you know, the ones that feel comfortable getting started, start tomorrow, because you won't get charged twice. And then, you know, it's gonna be cool to have you guys join. I can't wait to see what you guys think about the stocks I've talked about already over there, and all the stocks I'm gonna talk about moving forward. And yeah. No, Amazon is awesome. I'm just talking about the long term. They're gonna get hit. They're gonna get hit, and it's just part of I don't know if you guys know about, you know, glass ceiling. The saying glass ceiling. You think it did paperwork for bankruptcy? Yeah, man. Yeah, it's interesting stuff. But I don't know if you guys, they're good though. They're cool. They're good. But long term, or a few months from now, the glass ceiling is the fact that only something can go so high, right? And that's something I want Tesla investors to be aware of too, and a lot of other investors. Now, I'm not saying things can't stop growing, but even though it's growing, there's going to be a point where the growth is a lot slower and it won't just run up like that. But that's interesting that you think that they did paperwork for bankruptcy. I know that things are going to shift and change for Amazon at some point. I mean, just think about this. Jeff Bezos gave up being the CEO, chairman, if I'm not mistaken. I think I read about that. If anybody wants to challenge that, comment right now on there on the chat. But I think that's what they went ahead and did. They went ahead and Jeff Bezos stepped down, or like he left that position. So we'll see what happens. You just want to think about that stuff. But anyways, guys, I'm so thankful to have you guys here join me tonight. This was random. I wanted to try it for the first time. We could probably do this more often, talk about stocks, talk about different topics. But I do want you guys to be aware that the Patreon is not hype. It's not speculation. We will get to that point once the Discord comes out, and we're going to be a little bit more risky, and you got to be aware. You got to do your due diligence. But I'm always going to try to set us always up for success, you know, to maximize profits and minimize losses. That's where the other concept comes in that I'm going to go ahead and do the series to make you have a little bit more insight and understand where I'm coming from and how I look at things, so you can understand how I feel about the things I say, why I say them, and you're going to be completely in sync with what we try to do, which is maximize profits, minimize losses, and we focus on the destination, which is up, and we enjoy the journey. We don't worry about it, and we look for opportunities like hawks ready to strike. As always, guys, thank you guys so much for watching, and let's make some money. And man, I really appreciate all the support and the comments. Very encouraging to see you guys join in, ask questions, and I appreciate everyone's time here. Thank you so much.